Let's have a little update video here, just catching up, looking around, see what's going on. First of all, let's look at the, I always like to start off with what I call the elastic band. Let's update that. And as we can see on a historical basis, this thing is just hugely stretched. Not to say that stocks can't keep going higher, it's just an indication that things are getting pushed, but that's not a guarantee that stocks won't keep going higher. So let's have a look at the very big picture, the 15 years, just to keep things always in perspective. And I think it's quite evident that we're in a huge toppy situation area here. When you look at things in the past, and governments, central banks, whatever, are trying to fight this thing tooth and nail. The fundamentals of the global economy are awful, despite how much the headlines try and say otherwise. But it's all about timing, and you can't stand in the way of an oncoming train. And here is the zooming in a little bit more, and you can see what's going on here. This is the S&P 500, of course, and we've got this very aggressive bursting through the clouds business going on here from what was initially a let's do a little line here. This was a very tidy little channel here initially, shaping up to just be the start of a typical bear market early stages, but I guess too many people saw that, didn't like what they saw, Federal Reserve especially, and they've manipulated it higher again. And there it goes. So like I said, you can't fight that, and it's very unfortunate it doesn't go according to plan. But hey, that's trading. If I zoom in again, and I can just identify where the concern started. Everything was going, it got a little bit higher, but it was starting to roll over. And if you look at the RSI last week there, you could see it's finally starting to come down to earth. And this day here was a distribution day. You see how it closed at the end of its range, and we had an increase in volume. That was actually a distribution day. But the very next day, popped up again, okay, fine, bit of a correction there. But then after that, it was up like that. And that's when you thought, this bit here is when it started to put me on the back foot, and sure enough, straight after that, pushing higher into the clouds, and it's actually going to look. It's got the all-time high in its sight, so I think it's 21.26. So fine, let it get on with that, and I'll see you on the way down. Today, what's going on is there's more of an appetite for risk on that basis, and you can see here. And by the way, when I'm going through this process, this is just, you want to learn where I'm getting this from, why I'm coming up with all this commentary, and it's really just common sense. If you just look at the charts and start to train your eyes on reading what's going on here, you're really trying to translate what Mr. Market is telling you. Today, you can see this is the strongest for the day, so it's a good indicator to see what's happening today, and you can see by sector, and you can see they're dumping utilities. And obviously utilities are the safer, more defensive stock, which have been very popular until only just really today. And so there's more of an appetite for risk building, which is another bullish sign for the market, that as well as ignoring anything, any bad news at all, and there's plenty of it about. The market doesn't care, and that's a bullish sign, however nonsensical it sounds. And then just going through the Chartmill stock screener. The trouble with picking any new stocks right now, and I don't really want to hang on to any individual stocks, is as we approach earnings season. Earnings season, it could go either way. You could be in one of your trades, and the earnings come out that affect it favorably or not favorably, but that's more of a 50-50 deal, which isn't really the kind of odds that I like. So I won't want to be carrying as little as possible into earnings season. But if you were looking at trades to go through earnings season, there is a little trick you can do, and it's if you look at the usual selections in Chartmill, but if you look under ETF and you select US ETFs only, what you're going to get now is the ETFs, which are obviously a basket of things, so they're not so susceptible to individual stock earnings announcements affecting the price. So they have much like the overall stock index themselves. So if you were so inclined and you wanted to carry things through that look good through earnings season, ETFs is a good strategy. And there is one that caught my eye. Not that I'm going to trade it yet, but I am keeping an eye on it, and that's this one here. Got all the usual bear criteria selected, but this PJP, just for this little chart thing we get on Chartmate Hill, beautiful classic chart, gets below, pops up, pulls back. Once it gets below, it stays below it. And then if we go into, it's an ETF, PJP, there's no earnings announcements to worry about. So if we go into the actual charts and look at PJP, there it is, and we get it confirmed. And if I put my little tool down here, and I can quite easily, if you just play around with this, you can see quite easily there's a clear line at $65, which is forming resistance or support depending on the situation. So over here it breaks above what was resistance, up it goes, and then comes back over here. Let's do a little drawing here actually to make it easier on the eye. And there it is, right on 65, good enough. So here it is, bumping into what is clearly resistance, breaks above resistance, up it goes, messes around here. Obviously it doesn't, that is an amazing bit of action here for that week, which is obviously the week when markets fell apart last August. But yeah, finishes above it, so there's the close that matters, remember. So down it goes, bounces along. You can clearly see here, it's respecting support, what is now become support. Up it goes, bumps into its moving average, turns away, which I like. It's respecting its moving average and its support and resistance lines. Beautiful. That's what we're looking for. An orderly chart does what it's supposed to do. But then it bounces off its what is now a descending moving average, repelling in the right direction, and now hits support, and the following week breaks support. And then we get a classic bit of action here as it pulls back in an attempt. Once you've broken support resistance, it's very common to see this resistance like in the opposite direction straight after, and there it goes, bumping, but now it's resistance because it's fallen below, and down it goes again. And now what we see is it's bumping into what has become resistance once again. So it's obviously could go either way, we don't know. But what's also interesting, and another thing that's a good thing to look for in any chart, is this orderly movement. Now you'll see here there's approximately $5 increments going on here. There's one here at 55. What looks about got 65, and then you see another line at let's draw it actually. It's like it's got a 65 up here, and then down to around 60. It's only approximate, don't forget, it's not an exact science. 60-ish down there, 65, and then approximately 70. You can see there's like these $5 increments going on. And that's another nice thing to see, So there's the line of support and resistance in the middle, but there's also this boxy pattern going on. So what does PGP do next is the question, and that's why I'm keeping an eye on it. The overall market, as we know, is pushing higher, which is why I wouldn't just, here's the daily chart, so you see more detail, and there's my $65 line going way back. Remember, the more horizontal of the line, the stronger it is. The more touches the line has got, the stronger it is, and the longer it is. And obviously this is a very respectful line with that in mind. But look at the RSI pushing higher, but at the same time it's bumping into this is very descending line here. So we don't want to short a stock while the market is pushing higher and this RSI is looking like that. But I will be keeping an eye on it to see what happens next. If this breaks above that, it might be time to get on board that as a long. If it can't and it hovers below it and the market struggles, this would be a great short on the downside. And if we look at the weekly chart again, you can see that in normal circumstances, and these are certainly abnormal circumstances. In fact, the weekly chart, the SPX, is one of the most unnatural things I've seen in my 20 years of trading. You can see what's going on here. Usually what would be happening here is going to bump into that what is now an aggressively descending moving average, and down it goes. But holding off to see want to see it hovering in this in this location, at least hesitating or just breaking on through it. But then it's going to have another challenge on its hands as it gets to that moving average. So just a little bit of background there and updating, and a little bit of coaching as well, perhaps. And you might have just heard an alert go off, so I'm going to check that while I'm on the phone here. It was for a utility stock, which have been popular until lately today, but a lot of them are being very strong and still going to want to be held in portfolios because they're obviously very defensive and gives mutual funds a way of hedging. So you can see this one today, similar idea. It's been responding well, and it's now just bumped into what looks like a nice line of support. Is this a good entry level? Let's just see how it behaves there. Could be a very good entry level and what was a good stock. EDE is one of the stocks, utilities. It's in our portfolio, and what's great about EDE, why I'm probably happy to carry that one into earnings, is because it's got a very resilient line here. It hasn't really mattered what the market's done. This stock's doing its own thing, and if the past is any guide, then this is going to be bumping up pretty soon. But obviously, the loss of appetite for utilities today isn't hurting this stock much at all. So that's EDE. SWKS is the other one. And what we can see going on here was, again, let's look at our lines here. You can see a very clear line here at around 74, and you can see it there, and it broke the line there, so down it goes, and it's bumping right into it around here. And then recently, to our pleasure, it dropped below it just recently. We were in around this level on a short. Down it goes, broke support. But what's happening today, and it's not unnatural as I've just mentioned, is that you've got a bit of a pullback going on, which you see here in the RSI. Stocks don't go up or down in straight lines, so that's okay. But we'll keep an eye on it. What we don't want to happen is this thing to now bump back above 74, and that could endanger what profits are already in that trade. So, but what happened this morning, and you could see it happen in live action actually, was practically as soon as this stock touched around 71 there, which you can see is perhaps another line of support, buying came in. So there's an underlying bid, we call an underlying bid for this stock, where buyers have got orders in, let me buy at that level. So there's support for it. So let's see what happens next. But if this threatens to get above that level, we'll obviously be trying to cash out of that one, take profits too. So that pretty much covers everything for now, and the big story and the big takeaway is the overall market as it just powers higher and higher, fixated on its all-time high, and I'm not going to stand in the way of that. But it is coming down. Let's leave you with this picture. And but we've got to get the timing just right. Otherwise, especially with spread betting, it can be quite penalistic and ruin what margin you've got. And it's live to fight another day and keep your powder dry for the best opportunities. So, but things are changing daily. But we will keep you posted for the next thing.